Assalamu alaikum and welcome to the Islamic Entrepreneur. Today we're going to delve into the world of Islamic banking and business loans. Understanding how Islamic finance and banking work is essential for Muslim entrepreneurs. Join us as we explore the principles of Islamic banking and how it relates to obtaining business loans. Let's get started. Introduction to Islamic banking. Islamic banking is rooted in ethical and Sharia-compliant principles. We'll start by introducing the fundamentals of Islamic banking and finance. At the heart of Islamic banking is Sharia-compliance. This means that all financial transactions and activities must adhere to the principles of Islamic law, which include avoiding interest and uncertainty. One of the fundamental principles of Islamic banking is the prohibition of riba, or interest. Instead of earning interest on loans, Islamic banks engage in profit and loss sharing, where the risks and rewards are shared with the customer. Islamic banking encourages asset-backed financing, where all financial transactions are backed by tangible assets. This ensures transparency and minimizes speculative practices. Islamic banking embraces risk sharing, where both the bank and the customer share in the profits and loss of venture. This fosters a sense of partnership and mutual responsibility. Islamic banks invest in ethical and socially responsible ventures, avoiding industries such as alcohol, gambling, and pork production. Key principles of Islamic finance. Islamic finance is guided by core principles like the prohibition of riba and adherence to ethical and moral values. We'll delve into these principles. The most fundamental principle of Islamic finance is the prohibition of riba, or interest. Islamic financial institutions do not charge or pay interest, as it is considered exploitative and unfair. Islamic finance emphasizes asset-based financing. All financial transactions must be backed by tangible assets, ensuring transparency and reducing speculative practices. Risk sharing is a key principle. In Islamic finance, both the financial institution and the client share in the profits and losses of venture, fostering a sense of partnership and mutual responsibility. Islamic finance encourages ethical investment. Investments are made in industries and businesses that comply with Sharia principles, avoiding sectors such as alcohol, gambling, and pork production. Ethical conduct and fairness are integral. Islamic financial institutions must adhere to ethical business practices and ensure transparency in all dealings. Islamic business ethics. Ethical business practices are at the core of Islamic finance. We will discuss the importance of honesty, transparency, and fairness in business. Honesty is a fundamental principle. Islamic businesses ethics emphasize the importance of truthfulness and integrity in all dealings. Fairness and justice are core values. Business transactions must be conducted with equality and impartiality, ensuring that all parties are treated justly. Ethical conduct extends to every aspect of business, from product quality to customer service. Businesses are encouraged to uphold ethical standards in all their operations. Transparency is essential. Islamic business ethics require businesses to provide clear information to customers and stakeholders, fostering accountability. Social responsibility is emphasized. Businesses are encouraged to give back to their communities and support charitable causes. Sharia-compliant business loans. Sharia-compliant business loans are essential for entrepreneurs. We'll explore the types of business loans that align with the Islamic finance principles. The core principle of Sharia-compliant loans is the prohibition of riba, or interest. These loans do not involve interest payments, as they are considered exploitative and unethical in Islamic finance. Sharia-compliant loans require tangible assets as a collateral or backing, ensuring transparency and reduce speculative practices. In Islamic finance, both the lender and the borrower share in the profits and losses of business venture, creating a sense of partnership and mutual responsibility. Sharia-compliant loans are used to finance ethical and Sharia-compliant businesses. Investments are made in industries that align with Islamic principles, avoiding sectors such as alcohol, gambling, and pork production. Sharia-compliant business loans emphasize fair and ethical conduct in all aspects of the lending process, from application to repayment. Takaful, Islamic insurance. Takaful or Islamic insurance is vital for risk management. We will discuss its principles and the benefits it offers to businesses. Takaful is built on the principle of cooperation. Policyholders come together to form a Takaful fund, contributing their premiums to provide mutual protection and support in times of need. In Takaful, the concept of risk sharing is fundamental. Participants collectively share the financial burdens and losses faced by any member of the Takaful fund. Takaful funds are invested in ethical and Sharia-compliant ventures. This ensures that funds investments align with Islamic principles, avoiding industries such as alcohol, gambling, and pork production. Transparency is a cornerstone of Takaful. All Takaful operations are conducted openly, with a focus on fairness and equity among participants. Takaful is inclusive and accessible to all, offering protection and support to individuals and communities regardless of their economic status or background. In conclusion, thank you for joining us today on Islamic Entrepreneur. If you found this video informative and inspiring, please like, share and subscribe for more content on entrepreneurship, finance, and the intersection of faith and business. Until next time, Assalamu alaikum.